Guys, sorry for the break in transmission we had earlier. I think we've had a network glitch, so I had to fix that. Alright guys, so today we are going to run through our analysis just like we did on I think on Sunday at the weekly market open. I dropped a commentary and I showed you guys where my anticipation for the dollar was and what I was anticipating to see after the dollar traded into that level. And of course it is obvious that right now the dollar is playing to script. Alright guys, so during the weekly open I did an analysis. I did a top-down analysis starting from the weekly, monthly and the daily time frame, and I showed you where my anticipation for the dollar was and where I'm expecting to see the dollar trade into going into the week. And right now we are going to do a follow-up commentary just to see if that analysis has played out and also journal our experience trade into these levels, because the dollar was close to a buy side liquidity pool residing above here. We also outlined that bearish order block right here, and we were still looking to see the dollar trade into that sell side imbalance, buy side inefficiency, although we already said that we were anticipating to see a bearish repricing into the week had the dollar opened lower and starts to trade low to form the low of the week between Monday to Wednesday. We would have been anticipating to see price continue that bullish movement into that level. However, I also mentioned that if the dollar opens and starts to trade higher, okay, that would be a continuation move into the liquidity pool residing above that relative equal high, because the dollar was already close to that level. Okay, and I told you guys that every time we see that, just know that the institutions will quickly sweep off liquidity above or below the closest buy or sell side liquidity pool. If you are hearing me, please comment in the comment section. Let me know that I'm not just speaking to myself and you're seeing what I'm doing. You are seeing the demonstrations I'm doing on my screen. Please do not hesitate to comment in the comment section. Okay, I'm also seated in front of my okay, I think everything is right from my end. Everything is right from my end. Okay, so going down into the daily time frame, we were anticipating market structure. Remember, we said that once we define the institutional order flow from the monthly, weekly time frame, on the daily time frame we are paying attention to market structure. We need to see price maintain market structure. So if we are bullish, we need to see price maintain a bullish market structure, and you know what a bullish market structure is: higher highs, higher lows. A bearish market structure will continuously form lower lows, lower highs. That means it's clearing the lows and respecting the highs, like we see here. All right, price keeps taking out the lows and respecting the previous lower highs that were formed. All right, but in this case we had a shift of market structure, so we've been seeing price forming micro market structure. This is higher lows, higher high within the previous bearish market structure until we see that expansion that clears out the market structure, all right, of the weekly level. So we are in a bullish market structure. Like as you can see here, every expansion is going to engineer a retracement move into a fair value gap, and the purpose of that retracement is for fair valuation between the buyers and the sellers. Okay, it's for fair valuation. That's what fair value gap does to you on the chart. It's for repricing into a fair value that favors either the buyers or the sellers to engage in the marketplace. So it's engineering liquidity at those levels. Okay, so a new expansion, again, price traded down into that level, and then here is the market open on Sunday, or rather Monday, Tuesday, Wednesday. So you can see market opens on Monday, Tuesday, Wednesday. Price has been bullish, and it looks like we have the high of the week at this level right here. Price took out the buy side liquidity levels that we outlined at all of this level, and price has traded into a daily bearish order block right here. Okay, this obviously is the high of the week for this week's price action. Thursday and Friday is beginning to engineer that weekly retracement we were anticipating into at least the weekly discount level, or however, if you take a look at this daily time frame, you would see that this was the last place we had that engineered a swing low formation that formed that entire expansion move, all right, that cleared out the previous buy side liquidity pool here. So if you put a Fibonacci from the low here to the high, we will need to see price trade into at least 50% of the range. That will be equilibrium, or below 50%, that is discount level, before we continue to buy into the monthly draw on liquidity. Okay, but until then, we are just going to follow price action, okay, and allow price action to do what it wants to do. All right, guys, we're going to follow price action and allow price action to do what it wants to do. Okay, guys, so let's go down to the 4 hour, see what's happening on the 4 hour or 1 hour time frame. Okay, so you can see that on the 4 hour time frame, look at this. So I told you guys something, that immediately price trades above that buy side liquidity pool of the daily time frame, we would like to see price gives us a clear shift of market structure, okay, on the 1 hour or on the 4 hour. So you can see that price traded above the buy side liquidity level, traded into the bearish order block of that daily time frame, and now guess what, price from the failure swing and gave us a shift of market structure lower right here. Do you see that shift of market structure lower? All right, so price traded into institutional order flow entry drill. You like to ask what that is. Look at this, fair value gap by the left. You see that fair value gap by the right, fair value gap by the left and fair value gap by the right. That is institutional order flow entry drill, like I taught you guys in the other videos. Price traded into that level. Okay, we'll have executed the dollar around here. While we're executing to sell the dollar continuation, we'll be buying the pound dollar or any other foreign currency. Now also take note of this. If you take a look at this, this is the only fair value gap that we have. We didn't have any fair value gap of wolf here. All right, and then fair value by the right, fair value by the left, that's an institutional order flow entry drill. Okay, so look at this, the dollar is selling. Where is the drawn liquidity on the 1 hour? Look at this, the relative equal lows right here. This level is very sensitive and enticing. The relative equal low right there. Do you see that? Where is another drawn liquidity? Okay, look at these levels. Okay, but today is Friday, so of course we're not anticipating so much of a price action on Friday, because Fridays will usually cap up the week's price action. Okay, so look at today's price action. Price opened, all right, traded back into, look at this, there was a previous shift of market structure yesterday at the bond close, shift of market structure that created a fair value gap right at that level. So during the Asian session, or let's do this, let's add our Asian session indicator. You can see that. Right, so I've had some of you ask me I should show you guys how to set the indicator, so let me just use the opportunity here to show you guys. These are my indicator settings for the kill zones and the kill zone indicator, session indicators. You can see what I have here is I only display the London open and the New York open. You can see the London close as well. I don't even need the New York close, so I just need the London open and the New York close. So I click this box to display the London open and the New York open. You can click here to change the color of what you want, all right. So let's say my London open is this color, my New York open, let's give it a blue, light blue color. So you can see that that's my New York, that's my London open. So price open in Asia traded into that level and expanded lower. Okay, so look at what happened, because we are heavily bearish at London session. You see that start of London. At London session, what do we see? Price traded back into the fair value gap that was just created during the Asian session price action, and then created a new expansion lower.